What's going on, guys? Welcome to this really quick video. I want to break down gold, US 30 and the dollar, and have a look at what we can potentially see happen over the next couple of days. I just want to show you what I'm looking at. So because we've got the daily change of character here, what I'm looking for ideally, now we've got this rejection and break of trend, is buys. I want to be trading with the daily order flow. So what I'm looking at here is I'm looking at this head and shoulders. So we look here, look, we've got this head and shoulders coming down here. We've got a pattern, you see, forming here. So what I'm looking for gold to do is come somewhere around here and then reverse and consolidate in this zone. Here's a consolidation zone, the consolidation. So I'm expecting this to happen again. And why I'm expecting this to happen is because if we look on the dollar, trend line breaks for this are notorious for faking out the first time. Look at this one here. So we had a trend line here, and look at a fake out here, and then look at that big pump up there. So everyone was loading on the sells, and bam, everybody who was selling there got knocked out of that trade. So what I'm waiting for here, and this is why we've got two trend lines here. I'm not waiting for this trend line break anymore. I'm waiting for a candle close below this next trend line. So that extension will give us enough confirmation to say that yes, this probably isn't going to be a fake out. Or if you want to wait for even more confirmation, you can wait for the pullback and retest, or even this imbalance fill, depending on how you trade. But for me, a solid candle close here will give me enough confirmation using probabilities to say, hey, you know, we are now probably going to test here. We tested the highs 3 times on the higher time frame, failed high, and you know, whenever you get a failed high, especially multiple times, you can then expect the lows to be tested. So I'm looking to take this down to the daily swing low. So if we get a solid break here, we can expect this candle close here. We can expect this to retrace a little bit and then come down. So the reason I've drawn 2 trend lines as well, guys, is because once this trend line's broken here, look, price will go to here. And then price will mess around here before it does anything else. It'll break and then bounce up, and it'll just mess around. And what you'll find here, well, we have the indecisiveness in this zone here. This is where price will push up here, because we'll get, I guarantee, we'll probably get a fake out. Here. And as we get the fake out on market open, gold will push up. And then, as the dollar fakes out and pulls back and starts consolidating here, look, in this consolidation zone, so it'll fake out and come back in. And as it's doing that, we get the opposite on gold. We're going to get the push up and then the consolidation here. Now, because we're bullish, I'm looking for this pattern to complete. If we see the rejection here, I'm going to be looking for buys here. I'm going to be looking on the lower time frame. I'm going to be, you know, looking for liquidity grabs. I'm looking for, you know, accumulation, etc., etc. I'm going to be watching this. I'm going to be watching gold at the same time to try and avoid the fake out if we get one. Sometimes you get one, sometimes you won't. Sometimes you see price come in like this, and then the last tap, it'll look like it's going to break up, and then bam, it'll take off, then it'll shoot up, just like it did on Friday. Look, we was in the trade here, but we'd already took the profit, and then bum, up again. And the market's notorious for doing that, especially at zones like this, big trend line breaks. You get a lot of turbulence in the price action. So if we go back to gold, this is what I'm waiting for, this is what I'm looking for. And this will correlate perfectly with how the dollar is going to react to this trend line break here. So it's just about monitoring them both. So if we get a solid candle close down here, that is when I'm going to be looking for this formation to set up. As we get a close down here, we'll get a pullback. As we pull back, you know, gold will be going pushing down. So we could get a fake pullback all the way up here, and that will send this fake move down. And then we'll get a big pump up, because what we'll have is we will get a push out, little test, price will go up, fake out upside, and then boom, you know, straight down, wiping everybody out who thought they had the right direction. So that's what I'm looking for here. Head and shoulders to complete. It looks perfect. Trading with the price action. Head and shoulders net line break on a trend line. You can't get much better confluence than that, especially if we go down the lower time frames. We can really laser in on getting a super high risk reward trade. But I'm going to be buying down here. As long as we get confirmation here, I'm going to be buying. If I get wicked out or whatever here, I'm not really bothered, because I'll put buy stops in and, you know, get back in so I can catch this big move if it happens. If we get a fake out there, then the market's shown us its hand. We know then 99% probability. Don't quote me on that, but we just know with a higher chance that then price is going to push up. So once we get this break and retest here on the lower time frames, God, that's going to be a money trade. So if you get a break and retest here and you see that confirm neckline break, if this ends up being the actual true neckline. If this does play out, this is what I'm saying, I'm speaking theoretically, then that's going to be an awesome trade. On the flip side, what could happen? We could get a big fake out. And if we get a big fake out, like this, or not like that. One second, let me just delete that. So if we get a big fake out here, so boom, 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 like this, then we know if we get a big fake out, low time frame breaker structure here, candle close back above support, we know then with high probability that we're going to be testing the highs and that this pattern is going to be invalidated. Probably get a close back under here, and then we'll be aiming for the lows. Sorry guys, the video stopped there, so I'm just getting back onto it. So I was just about to move on to US 30. So US 30's been... So US 30's had an opposite correlation to the dollar recently too. The dollar's pumped in one direction and SPX has pumped the other. So what we can see here, guys, look, if we go on to the daily, we can see we've got the previous daily swing high here, which again is another consolidation zone. Price is sitting on previous resistance. So now we're on another zone of indecisiveness, I like to call them anyway. So what we're looking at again is... we're putting emphasis on the dollar. So if we go down to, let's go down to the 4 hour. So on market open, if we see a push on the dollar, we're potentially going to see a push up here. And then what price is going to do, it could, you know, go straight up and the dollar could fall straight down. But what the market likes to do is mess everyone around. So what I'm thinking, this is what I'm predicting, because I see this more often than just the clean moves in the market, is price is going to fake move up. And then it's going to come into this zone here. And then this is going to match up with what we said on gold in regards to this zone of consolidation here. US 30 is going to come into a zone of consolidation as the dollar fakes out the opposite direction and then comes back into a zone of consolidation. You're going to keep you thinking. You're thinking, is it going up? Is it going down? Etc. Etc. But we've had 3 failed highs on the daily. And opposite to that, we've got breaker structure on gold, breaker trend. We've got head and shoulders forming. So when we look at pairs, the opposite correlate, and we have a lot of insight that price is potentially reversing, you know, we can add all this information together and then predict that the dollar is going to continue down. Failed highs, failed highs, failed highs. We're going to break the structure here. Fake out again, pretend it's another trend line break. We've had 1, 2, 3 taps on there. Everyone's going to be thinking, you know, it's going to, all the continuations are going to be buying. You know, all the breakouts are going to be selling on the opposite pairs, not on the dollar. So people will be selling at market open. Might catch some pips, but I can guarantee it's going to fake one way, fake the other, and then continue going down. But let's see, it could go completely the opposite way, as we've spoke about. I'm just lining up what I see in regards to price action and technicals and building confidence. So let's go back on here. So again, we're at that daily swing high. So what price is going to do here? It's really simple. Price is either going to reject this zone and come down, and it could reject this zone like this. Fake people up and then come down and break down. Or it could fake people up, come down, fake people down, and then fake people down again, and then go up like this. So what I'm going to be watching most is the behavior of the dollar and where the dollar goes, while at the same time monitoring these zones, because we're in consolidation zones here. Gold's in near a consolidation zone. Everything's looking like it's going to break out. I guarantee we're going to get a fake breakout, and then we're going to head into that consolidation zone there. But it all depends on candle closes, time frames, confluences, price action, etc., etc. But the dollar does look like it's getting weaker as well, so I'm in favor of these patterns playing out. But as I say, I could be completely wrong, guys, so just take that into account. I'm just trading what I see and what I see now. So take everything with a pinch of salt, but if you do see what I said play out, then 1,000,000% trade them. You're going to get updates off me anyway. I'm going to be trading them at the same time, guys. But yes, if we make structure on here, we're going to be buying up to this swing high here. That will be my target. But because we've got this imbalance zone here, I'll be, you know, looking at this as my first target. I'll just be low, actually. I'll be looking kind of this zone, anywhere in this zone here. If we're pumping and pumping and pumping, I'll wait till we get rejection and low time frame breaker structure on the retrace, and then I'll just take the profit out there and I'll move the stop loss up or whatever. Trade management. But we've got to get in the trade first. So what we've also got here, look, is, you know, harmonics. Now, these are really good for indicating prices, good PRZs. D points of completed patterns are very strong because they always land in zones like this. Whether you're trading smart money, whether you're trading support resistance, etc., etc. The D points, when a D point of a harmonic lands on a zone like this, it's basically just an extension. You know, all harmonics are just psychological patterns, the same as using the FIP. Everybody's just got their, preferred method of trading. But in regards to all of the retail strategy, if you want to call them, they all work pretty similar. They all end up in a supply and demand zone or support and resistance zone. They all use the similar low time frame confluences. It's just, who likes to trade which strategy at the end of the day. And, every strategy, suits somebody different. But almost every strategy works. It's the person, the driver of the strategy that makes it successful. So just say if you're adding this confluence here with the fib, it's not like two confluences. If you do the harmonic and do the fib, and they land on the same point because you're using the same tool essentially. So remember that. But yeah, if we break this, then we will be aiming for the D point here or the 618. But we just got to take into account this rejection zone here and this imbalance, because we can probably guarantee we're going to get a reaction there, or this could be liquidity. And I say this because we've got the 618 just above it, and we've got another imbalance there. So we could see price come up like this and come up, pretend like we see this a lot, like it'll hit this and it'll make like a lower time from head and shoulders, and it'll invalidate it and continue going up, swipe that liquidity, and then it'll come down, back to previous levels here, and the head and shoulders come down, etc., etc., and then it'll sort itself out. However, we'll wait for price to do what it does. First of all, we need to see where the open goes and see if we get a good consolidation ready for a potential breakout tomorrow at London Open. So enjoy the rest of your weekend, guys. Hope you enjoyed this video, and if you've got any questions, throw them in the chat. Peace out.